8:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching IndianOpen. Let's go straight to the headlines at this hour. Investors take a cautious stance across Asia after the S&P falls to a 14-month low as investors and markets brace for a rate hike in the US. Oil prices are on the track for a third straight monthly decline. West Texas Intermediate ended below the $50 a barrel mark yesterday, the first time in over a year. UK Prime Minister Theresa May will put the Brexit deal to vote on January 14th. Jeremy Corbyn calls for a no-confidence motion in May. The Cabinet approved amendments to two existing laws to provide legal backing to link Aadhaar with mobile numbers and bank accounts. And debt-laden IIFL has now put its road assets on the block as part of its debt resolution plan. Well, it wasn't the best of days for the US markets, and I think what all of us will do over the course of the next few days would probably be taking cues from the US markets, though we kind of have defied them. But look at what the US markets did in trade yesterday. Let's start off with that because the global nature of the market is in focus today. They ended lower, about 2% apiece for the Dow, the S&P and the Nasdaq. At about 9:30, they were down about 300, so they only worsened during the course of the day. As a result of what's happened yesterday and over the course of the last few days in the month of December, the S&P 500 is on track to post its worst month of December since 1931. That gives you the extent of losses that have come in. Mind you, if the losses wouldn't have been so steep, then for the year, S&P 500 would have ended in the positive for 8 or 9 straight years, which would have been quite remarkable. But unfortunately, this fall brings it into negative territory. And with the number of days pending, one doubts that there could be a recovery so quick that we would end in the positive again. But yeah, it's not been great going for the US markets, and terrible the month of December, to be honest. What do you watch out for? And I think a couple of volatile cues as well, both of which could have some impact on the market. Firstly, Xi Jinping is going to have a speech on China's reforms, which a lot of market experts or market watchers believe could have some consequences for trade war. So every word that he speaks and the market understands would be watched and heard with bated breath. And two, something that I believe led to the fall for the US markets yesterday, and again, the talk of all that's happened on the US markets or on the Bloomberg website yesterday as well, is the FOMC meet commences today and the markets brace themselves for one more rate hike. Donald Trump didn't shy away from taking a jibe. He mentioned in a tweet that it's incredible that with a very strong dollar and virtually no inflation, the outside world blowing up around us, Paris burning and China on the way down, the Fed is even considering yet another interest rate hike. It didn't take too long for him to get on Twitter to talk about why there is no need for a rate hike. But I think the markets are bracing themselves for a rate hike. Should that not happen, which is very unlikely, I presume, but should that not happen, then, well, there could be a bit of a pullback. But frankly, speak to almost anybody and they believe that the rate hike is a given. The question mark would be on the nature of the commentary that Jerome Powell and the Fed give post this FOMC meet. So let's wait and watch what happens there. On what could be a bit of a relief for Indian markets today, the NYMEX crude or the crude prices have come off. NYMEX has dropped to 13 or 14-month lows, below $50 a barrel for the first time in over a year on oversupply concerns, and maybe that could just be a bit of a relief that the Indian markets want. Though Asia has a sea of red, Nikkei is down about 1%, Shanghai about 1/3%, and there's Hang Seng marginally in the green, and there's SGX Nifty not falling as badly as the Dow would have led us to believe, about 1/3%. We nudged the 10,900 mark in trade yesterday. Let's wait and watch whether we digest this fall or do we continue to fall in line with the US markets as well. However, amidst all of this, what are the stocks to watch out for? Frankly, I don't want to get into what individual option strikes, etc. are suggesting, because we would gyrate a lot to what happens in the global world over the next few days. So our own individual trading positions might be meaningless, so don't want to talk too much about it today. But specific pockets of strength or weakness, let's see if HP, Asian Paints, Berger Paints, IOC, etc., all of them react to crude price falling yet again. So let's wait and watch if there is a bit of a trading impact out there. NMDC has revised the iron ore prices for the second time in the month of December. They have cut prices by 8% on a month-on-month basis. Let's see if there is a reaction on NMDC today. Concor, and I think we saw this in a brokerage note, there is a 25% discount that the Indian Railways has given to carrying charges for empty containers. Now, some bit of Concor's operations are empty containers, and this discount could well aid earnings for container corporation. So let's wait and watch if Concor reacts a bit in the session today, positively I might add. And it's a very small earnings impact, I presume, but maybe a sentimental impact for Graphite India. They have consent to operate the electrode plant up to June 30th, 2020, subject to conditions, of course. They will shift the unit from Bengaluru. It's a very small earnings impact, as I said, but maybe a sentimental impact. And let's wait and watch if Graphite India reacts at all to this piece of news or not. My guess is that even if it reacts, it won't react too much, but you could have a minor reaction, positive, I might add, on Graphite India today. Mind you, the market might just weigh down, so that's a separate issue altogether. That's somehow the summation of what I believe is the most important thing to watch out for in trade today this morning as we start trade. However, what are the top editorial stories that we want to bring to you on First Word today? We look at the best and the worst performers this year in Indian equities. Amit Sarkar has drawn up a list. Let's try and figure out what makes it to the list and why. December saw many promoters and employee trusts alter their holdings in frontline stocks. Jatin Mota will join us with the significant changes that have happened. The Coal India board will meet on December 20th to consider an interim dividend. Nikki Mirchandani tells us what the shareholders could look forward to. And Quality's fortunes turn for the worse in just one quarter. Agam Vakil has done a deep dive into the company's balance sheet to take stock of the situation. We're nearing the end of 2018 and it's time, as is the norm I might add, to look at how Indian equities or how equities by and large have performed this year. So Amit Sarkar is standing by with the best and the worst performing sectors for the calendar year so far within India. Samit, good morning.
Good morning, Neil. So I'll start with the indices first. Now, if you see Nifty 50 and Nifty Bank Index, now they have gained nearly 3% and 6%. They have been gaining for the third straight year. However, the gains have been the lowest in the last 3 years. The Nifty IT Index, now that has gained nearly 28%, the most since 2013, led by top leaders like TCS and Tech Mahindra, while Nifty FMCG, clearly standing out as a defensive sector, has been gaining for the 10th consecutive year, and so far in 2018, it has gained close to 14%. On the loser side, if you see, the Nifty Realty Index, now that has fallen nearly 32%, its biggest drop since 2013, and this is the only index which has no gainers so far in 2018. This is followed by Nifty Media, which has cracked nearly 25%, drops the most since 2011 with only one gainer in the index, that is PVR. Nifty Auto Index, now that has fallen nearly 22%, the biggest drop seen by the index since 2008 on the back of expected slowdown in volumes because of trade wars and higher raw material prices and higher crude prices. Nifty Metal, now after 2 years of consistent gains, the index has cracked nearly 20% in 2018, the biggest drop since 2015 because of fall in prices and because of trade wars. While Nifty Pharma, now that has continued to fall for the third straight year, and in this 2018 it has fallen nearly 9% because of the continued pricing pressure seen in the US market. That is the key market for the Nifty Pharma.
Interesting. So Samit, let's break this up into stocks. Which are the ones that stand out and the reasons thereof?
For stock specific, if you see, I have TCS and Tech Mahindra, which have stand out for me. Now, they have gained nearly 48% and 43% so far in 2018. This is the highest gain seen by both the stocks since 2013 on the back of rupee depreciation and because of deal win that the company has seen in 2018. Bajaj Finance, now that has gained 41% in 2018. It has been gaining for the 7th straight year on the back of a steady rise in its asset under management and because of stable NPAs. Dr. Reddy, now that has bucked the Nifty Pharma index trend and it has gained nearly 8% in 2018, and this is the first time in the last 4 years where the stock has gained because of steady quarterly earnings, steady cost controls seen by the company, and because of the recent case that it won against Endeavor for the selling product Suboxone. On the loser side, if you see, now this is the most interesting things that I've seen. HPCL, now that has cracked nearly 45% in 2018, while Sun Pharma has cracked nearly 26%. This is the biggest decline seen by both the stocks in the last 20 years, that is since 19 1998. Now, HPCL fell on the back of contracting marketing margins, while Sun Pharma on corporate governance issues. While Airtel, Infratel and Indiabulls Housing, now they have fallen in the range of around 33% to 41%, the most since listing for all the three stocks. Now, Airtel and Infratel declined because of the pricing pressure seen in the telecom industry and because of consolidation, while Indiabulls Housing Finance declined because of the liquidity crunch. Now, Eicher Motors, now that has declined nearly 22%, and this is the first decline seen by Eicher Motors since 2008 because of a planned shutdown and because of the slowdown in volumes seen for Eicher Motors. Now, if you see in the broader markets, the stocks that stood out for me, first was PVR. Now, that gained nearly 11%. Now, this was the only gain on the Nifty Media Index, and the stock has been gaining for the 7th straight year for the index, and this is on the back of strong growth that has been seen and because of inorganic expansion that the company has been doing. Now, Biocon, now this stock has been bucking the trend for the Nifty Pharma Index for the last 4 years. The stock has been gaining consistently for the last 4 years, and in 2018 it has gained nearly 18%. Exide Industries, now this is the only stock in the Nifty Auto Index which has given some substantial gains in 2018. It has gained nearly 16% on the back of fall in lead prices, market share gains and new product launches. Lastly, couple of stocks on the declining side from the real estate sector, especially Indiabulls Real Estate, which has cracked nearly 62%, while DLF, which has fallen nearly 31%. Now, this is the biggest decline that Indiabulls has seen since 2008, while for DLF it is the biggest decline since 2011 because of rising interest rates and because of liquidity crunch seen in this sector.
Yeah, there are some surprises here, isn't it, Amit? At the start of the year, nobody would have thought that oil marketing companies and real estate would have such steep falls. And some very interesting moves in Bajaj Finance despite the NBFC crisis, and PVR despite obituaries written about the business model due to Netflix, etc. 7th straight year of gains. Amit, very interesting data. Thanks for putting this into perspective. That's Amit Sarkar and some interesting trends for the year gone by. We'll of course revisit some of these during the end of the year as well. The next piece on First Word today. Promoters and employee trusts often rejig their shareholding in the respective companies, and December is no different. But some of these changes are significant and may have an impact on the company's operational or managerial decisions. Yatin Mota is here with the list. Yatin, good morning. What prompts you to believe that there could be significant impact on the managerial or operational reasons?
Well, Neeraj, more importantly, this is the data that is compiled by various brokerages and available on the stock exchanges. Which we are talking about. More importantly, for the past few months, the activity on the promoter side was slightly lackluster, and we are looking at December, which is seen some bit of pickup, especially in the frontline stocks. So we are talking about the top, 100, 150 companies where the significant amount of changes is happening. If you talk about the Aditya Birla Group, significant amount of activity which is happening there. Remember, we have all of the Birla Group stocks which have been correcting significantly in the past few months or so. But Hindalco, the Employee Welfare Trust, has bought nearly 4 lakh shares from the open market since the 1st of December till date. Also, Grasim, wherein their promoter entity Pilani Investments has lapped up nearly 2.42 lakh shares in terms of value. It is quite significant. So watch out for Grasim in particular. And Biocon, as Swamit was mentioning in the earlier link, 4 years of straight gains. And the Biocon India Employee Welfare Trust has bought nearly 2.5 lakh shares from the open market. So probably, these are the few entities wherein we have seen a significant amount of lap up coming in from the promoter group or the related parties, which includes insiders and employees. Of course, in the key sales, we have Axis Bank, and remember, LIC is a seller there. Nearly 56 lakh shares sold in the first week of December itself. Of course, there has been no fresh sell which has come in post 7th of December. But this is one stock wherein the selling of LIC has led the stock to be probably range bound. DMart, this is also another trader favorite counter. Nearly 1.15 lakh shares sold by employees and insiders. Of course, this is largely to do with the fact that a lot of ESOPs get vested and probably they get liquidated into the marketplace. Similar is the case with HDFC AMC, wherein insiders and employees have sold nearly 76,000 shares in the open market. Again, this is the case of ESOP being invested and sold in the open market by employees. Also, let's talk about the pledge data, because that is also quite interesting. We have companies like Motherson Sumi, wherein the promoter pledge has doubled in the last few days. This can be attributed probably to the sharp fall in share price. And of course, it's not at an alarming level, but still 9.4% of total equity is pledged. However, if you look at it from the analytics perspective, the promoter group pledge has doubled in the month of December. JSPL also, we have seen the promoters do a fresh pledge of nearly 2.1 crore shares since the start of December. And of course, this is one counter wherein we have seen a lot of pledge revocation and fresh pledge being done on a routine basis. Probably this is to do with the promoter guarantees with the lenders. And finally, talking about few companies wherein the pledge has been significant and brokerages have some bit of red flag there. Z Entertainment Enterprises, Reliance Capital, Max Financial, HCC, Suzlon, all of these stocks having significant amount of their promoter stake being pledged. So nearly 60% of promoter holding is pledged in the case of Z, and HCC and Suzlon, the numbers are quite large. In fact, for Suzlon, nearly 100% of the promoter holding is currently pledged. So these are the few counters again wherein dealers are looking opportunities on the trading side.
Now, one or two standouts wherein there could be some managerial impact or operational impact as a result of these sales or purchases, Yatin?
Neeraj, Axis Bank is one stock wherein LIC has been selling consistently, and the market probably is looking at it from the Suti stake sale perspective as to how really that will shape up, because that is also an hangover. Plus, LIC selling in the open market nearly 65 lakhs, sold, by a lot of these institutional investors is something which the market is watching out for. So Axis Bank is probably one standout. Wherein on the back of LIC selling, the stock has been range bound, and a lot of dealing rooms do expect that the government will also divest a portion of the Suti stake in the open market, apart from the CPSE ETF divestment that they have done.
Well, so let's wait and watch what happens there. Nathan, thanks for putting that into perspective. Some interesting buys and sells by insiders and employees, or in certain cases even the promoter groups. Couple of stocks and news. Coal India, the board will meet or will be meeting on December 20th to consider an interim dividend. The coal miner rewards its shareholders rather generously if past records are anything to go by. Nikki Mirchandani is standing by. She's gone through the data to draw up 3 possible scenarios. Nikki, what can the shareholders look forward to, and does it have the balance sheet strength to go ahead with the most generous of the assessments that you would have done?
Sure, Neeraj. I'm going to start off with the stock uptake first. In the last 7 days, we've seen the stock gaining as much as 6%, rallying for 5 out of 7 trading session. And yesterday, the announcement came in that the company's board is going to be considering an interim dividend on December 20th. We just looked upon the history of how the company has paid out the interim dividend for the last 5 years. And if you look at the data from March 2013 to March 2018, we saw the dividend coming up at an average of around rupees 18 per share. At the lowest point, it was rupees 4 per share, and also at the highest, it was at rupees 27.4. We reversed calculated the dividend payout ratio, given that we have the equity paid up shares, which is 621 crore, and also now we have the average dividend price for the 5 years, highest price that we've seen, and also the lowest. Back on that, we calculated how much cash the company will have to utilize if it gives out the dividend in these 3 scenarios, which is at an average of around 18 per share. It will have to utilize around 11,178 crore of cash. On highest point, which is 27.4, it will have to shell out a cash of around 17,000 odd crore, and at the lowest, which is at the dividend pay of 4.3, it will have to shell out a cash of around 2,670 crore. So 2 key numbers here that we like to keep in mind will be 11,000, 17,000, 11,000 being the average and 17,000 crore being the highest one. Now let's see whether the company's balance sheet has that kind of strength. Obviously, it's a cash-rich company that we're talking about. Net, it has 40,000 odd crore of cash as well as investments on this book, which means that even after the highest higher dividend payout, it will still have a significant room towards the buyback. We also back calculated. Now the government holding in this Coal India is around 72.92, which has significantly dropped from 78% that you've seen previously. Having calculated that, what government will get from the dividend declaration, at an average, it will get average dividend price of rupees 18 per share. It will get 8,150 crore. At the highest dividend, it will get a sum of around 12,400 crore, and at the lowest dividend, it will get a price of around roughly 2,000 odd crore.
Okay. Thanks, Nikki. Thanks for putting that into perspective. Well, one more stock that may not have generated enough shareholder interest, but journalist interest for sure. And a lot of change over the last 3 months but can come in, and Quality is finding that out the hard way. The dairy product maker posted a loss that's 3 times its sales and got dragged to the insolvency court after failing to honor repayments. So what led to such a situation? Agam Vakil is here with the answer. Agam, good morning. Eye-popping numbers yesterday. Yeah. It's not necessarily a trader-friendly stock or an investor-friendly stock because it's out of bounds for most people.
Right.
But very interesting numbers.
Yeah, absolutely, Neeraj. And, one might think and wonder why a stock which is trading at 100 rupees per share just a year ago is now below 10 rupees a share. And we've been tracking developments from time to time. As you can see, that's the kind of returns that the company has given over the span of the last 1 year, where your market cap has deteriorated from 2,400 crores to, well, less than 200 crores right now. Let's pull up how we've seen that deterioration in your revenues as well, because you might notice that while in the last, of course, revenues for this quarter is at 351 crores, and there has been a marked reduction in revenues over the last 3 quarters. This has to do with a lot of factors that I'm going to talk about, but let's also pull up the profitability, and this is where things get very concerning. While the company posted profits of around 21 odd crores for the third and the fourth, or rather the second and the third quarter of FY18, it starts getting a bit murky. And now, at this point in time, for the second quarter of FY19, it has posted a loss of around 951 crores. So first thing first, let's talk about why we've seen that loss. And for this particular quarter, the company has registered other expenses worth, well over 900 crores. Of this 900 crores, the company suggests, and this 900 crores is about 2.5 times the kind of sales that it has had for this particular quarter. Now, the company suggests that these other expenses are for 760 crores worth of credit notes issued to their debtors for the periods of FY16, FY17, and FY18. Why the company has waited for 3 years to have accounted for, well, these these credit notes is that first question that we want to know from the management. Another 100 crores of this 900 crores has already been written off as bad debts at this point in time. So that, of course, amounts to the reason why we're seeing that big loss of around 950 crores. The other issue that the company is currently facing is the blockage of working capital, as the company has said that the banks are refusing to give them any more working capital, which is why you've seen that sudden drop in your revenues as well. Of course, this is largely to do with the banks not willing to give them working capital because they've clearly seen that their debtors are not paying them up. But moving on, finally, let's come on and talk about the balance sheets. And this again, where there are things where things are getting interesting. Now, their trade receivables are at 1,594 crores. Their revenues for the first half of FY19 is 1,613 crores. Their trade receivables are at 98%. That is almost all of their revenues that they have accounted for in the first half of this FY19. They are still to receive, which means that they cannot account this. It's not accounted for. And moreover, let's talk about inventories then. Inventories are down at around 65 crores as against 210 crores back in March of 2018. The cash reserves, the cash and bank reserves have reduced drastically to 2 crores now as against 80 crores. And this again is a concerning factor. Their short-term debt increasing by around 150 odd crores, and the long-term debt also increasing quite substantially. Which brings me to the question then, is that what happens to their interest or finance costs even as they reel under pressure when their top line has deteriorated and they're going into loss? Your finance costs have risen 20% on a year-on-year basis for the first half of this FY19 at around 120 crores. So there are problems all around, Neeraj. The few questions that we want to ask the management is that why did they take so long to account for these credit notes, and why is it that now that these banks have stopped disbursing loans to them, and what now, and if at all there is any remedial action? But there's no wonder then the stock's currently trading at around 8.5 rupees per share.
And there could be some more concerns that will come up as well. There's a brief synopsis of what's come out in the balance sheet, and I think all of these reasons are probably why the stock is trading at where it is trading currently. Right. Not the best of releases yet. Agam, thanks for putting that into perspective. That's all that we have on First Word today, but lots more lined up on Indian Open. We discussed the key growth drivers for Titan with CFO Subramaniam. He joins in at 9:30 to talk about that. How is demand shaping up for Escort's construction equipment business? We asked the CEO of that business, Ajay Mandar. But after this break, a full tilt towards the day's trade.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate, and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Hello and welcome back. You're watching Indian Open right here on Bloomberg Quint. Let's take a look at what's been happening across Asia. So there is some amount of pain that we are witnessing. Nikkei 225 is down about 1.2%. Shanghai is down about 0.5%, with the Hang Seng trading slightly better off compared to the rest just 0.25% or so given up on back of what's been happening in the US. Remember, S&P 500 now is on its way to see its worst December in over 90 years, Neeraj. So that's something that is an interesting statistic out there. But for the SGX Nifty, that's the chart there, that's the worst December since 1931 for the S&P 500. For the SGX Nifty, the move seems to be a little bit more subdued, so 0.33% given up. Yesterday, we nudged 10,900, goes to see if today's session can manage to overcome it. But what happened in the futures and options space in yesterday's trade, and how did it all stack up? Were there considerable longs that were built into the system, or it was still on the back of some shorts getting covered? Agam Vakil joins in right now with more details. Agam.
Well, there was more activity in the Nifty banking futures as compared to the Nifty futures, and it's evident in the numbers. And if you can actually pull up the Nifty futures, as you can see, there was very little change in open interest. But bring up the Nifty bank futures, and that's where you're seeing longs building up, even as its underlying advances by around 0.75%. And in the India VIX, of course, came off quite substantially, in fact, by another 4%, now at around 14.5. And moving on in terms of your other key variables, what we're looking at is open interest distribution. If this, of course, remains unchanged. But in terms of change in open interest, and that's what I'm really interested in looking at, is that we've seen a lot of, writing around the 10,800 and 10,900 mark, as you can see, in terms of the put side. Bring up the Nifty put call ratio, and that's where you see an increase too at 1.61 for the Nifty, and the Nifty bank put call ratio at 1.38. There was no changes in the stocks in terms of F&O ban, but BEML, fresh long seen there. Look at that surge of nearly 8%, 36% added towards longs. We also have longs in something like Cummins India, which also advanced in trade. And curiously, OMCs, or perhaps looking at some strength on the back of oil. BPCL again advancing by 1.5%, with the longs building up there as well. But the real question is, can these gains hold, at least as far as the opening is concerned? Let's go wait and watch. But on the whole, looking good for some of these stocks.
All right, great, Agam. Thanks very much for that. So those are some stocks as well as the bank Nifty that you need to keep an eye out on. It's interesting, Neeraj. We'll have to see yesterday's session, two interesting pockets, or rather stocks. So one being Kotak Mahindra Bank, down about 3.5%. They've not got an extension to the deadline, so it's just a few days away. We have to really, wait and watch as to what comes out of Uday Kotak's pocket on that count. And the other pocket was, Power Grid and NTPC and the CRC draft norms, which worked in favor for both of these counters. So whether or not there is any form of a carry forward trade into today's session, it's more positive for Power Grid, more neutral to positive for NTPC, but both these stocks did well. In fact, on that note, let's get in Gaurang Shah, Head Investment Strategies at Geojit Financial Services. He's joining us on the show right now. Gaurang, thanks very much for taking out the time. Let's talk a little bit more about specific stocks now, and I want to come to you first off with Kotak Mahindra Bank. Now with just a few days left to go before the deadline for bringing down the promoter shareholding comes about, what are the implications of that for Kotak Mahindra Bank, and how do you see the stock moving in the near term?
Good morning to you and all the viewers. So first, a disclosure, we do have a positive coverage on Kotak Mahindra Bank. And it's rather sad and unfortunate. I don't think, first of all, this is my personal opinion. I could be wrong and I stand to be corrected. It's my opinion. I mean, it should not have landed in the High Court. Whatever differences and issues were there, I think amicably you could have sat across the table and ironed out all those issues rather than going and land up in the court of law, because whenever that happens in India, as we all know, it's only date after date. A resolution takes a while to come through. So it does impact sentiments rather than having any meaningful impact on the earnings front. So, first of all, I think you will need a credible name with that much of a capital to come in case if you have to go by the deadline that has been set aside by the Reserve Bank of India. And also the fact is that immediately short term, it all depends upon how and in what form the news flows evolve over the next maybe about 2 to 3 weeks. But my personal feeling is that that will not impact the earnings of the bank. And I guess it's going to be business as usual rather than getting disturbed by these short-term negative news flows. I think long-term, we would recommend to hold on to Kotak Mahindra Bank. And during this short-term period, if you do get an opportunity closer to 1200 or below, I think that's going to be a great time to add to your investments in case if you got in at a higher level or make fresh investments as well.
Well, do watch out for Kotak Bank. As Devina said, do watch out for NTPC Power Grid. There are a few stocks that will have major impact based on news today. We'll get in our research team in just moments from now to talk about that. I still believe that over the course of the next few days, with what S&P is doing, the larger trade could well be following the global markets as opposed to having our own individual charts. So let's wait and watch what happens today in the speech that Xi Jinping gives, and then tomorrow when the FOMC decision is out and the commentary thereof, if not anything else. I really doubt that there will be a pause, so don't quite see a reversal. But if the commentary is dovish, then maybe just the market gets some straws on which they can clutch on. So let's wait and watch if that happens. But since we are talking about specific...
But interestingly, it already got a flavor of a little bit of the dovish tone, but that didn't do much for. So we had a moratorium of the trade war that didn't do anything. You had a little bit of an indication of a dovish tone from the Fed chairman, that didn't do anything. Valuations being so cheap, not doing anything. So it looks like the bulls are really behind the guard right now.
Yeah, well, certainly does, and maybe that's why in such a pessimistic scenario of some gloom, if indeed there is some positive formal commentary that comes out from the Fed, might just help the US markets. Our markets are not doing all that poorly, by the way. 10,900, I think we'd have taken it with both hands, to be honest. Anyways, we'll talk more about this with Gaurang, but let's first get in our research team members to talk about all the key stocks in news, maybe some brokerage views as well. A couple of very interesting notes have come out, and Nikki and Amit join in with precisely that. Let's start off with the stocks in news. I believe NMDC and a few others stand out today.
I'm going to start off with NMDC, where the company has cut prices for second time in a span of 15 days, 8% cut coming in month-on-month basis. And if you look at the development which has taken place, the NMDC has sued Karnataka government on account of the revenue share loss from Donimalai mining ore, which is a financial express development that we're talking about this morning. Graphite India, where Karnataka Pollution Control Board has given a consent of operation for the company's electrode plant to be operated until June 30, 2020. But then this comes with a condition that the plant will now be shifted to another location, and all the processes will remain the same except for one process, which is impregnation, a part of making of graphite electrodes. This will have a limited impact of less than 0.5%, but if the Bengaluru land is monetized, then that could offset the impact which can be seen on FY19 financials of the company. Ashoka Bilcon, where the arm has raised around 150 odd crore from Morgan Stanley India Infrastructure for city gas distribution. That's one development that we need to keep an eye out. Apart from Sadbhav Engineering, which said that it's on an analyst call, said that it's going to be selling 12 road projects which have an enterprise value of around 10,000 odd crore. Again, Tata Motors is expected to be in focus because JLR has hired Boston Consulting Group for around $3.2 billion for a turnaround strategy plan. It has said that workers have not been informed of any job reduction in January next year, given that at least a 45 days notice have to be served to them for this development. A Bloomberg exclusive ILNFS transportation network, where the press release suggested that the company is looking to sell around 22 assets and businesses in its domestic road vertical. It has appointed advisors with that and also sought expression of interest for road projects. And last in the list is Bombay Dyeing and Manufacturing, where the company board has approved the closure of its loss-making Indonesian arm from December 31st onwards.
Okay, we'll watch out for all of these. Bunch of stocks in detail explained by Nikki. What about brokerages and what have they mentioned today? A couple of interesting notes from mid-sized brokerages, I presume.
No, the one is from Nomura, so and that's on Container Corp, where the brokerage has maintained its buy rating with a target price of around 800 rupees. Now, Indian Railways has cut their carrying charges for empty containers and wagons by nearly 25%, which will be effective from 1st January 2019. Now, Nomura sees this development as a positive for the stock, as the same would lower the company's cost going forward. Now, for the first, to give an idea of how big this amount will be for Container Corp. Now, in the first half of financial year 2019, Container Corp had a cost of around 122 crore rupees for these empty containers. So this move could now lower Container Corp's total cost on a full year basis by nearly 60 crore rupees, says the brokerage. However, the brokerage sees the bigger benefit to come in terms of market share gains, as this move could boost container volumes going forward. Lastly, the brokerage is expecting the early benefits of this move to come in the fourth quarter of financial year 2019. And along with this, the recent price hikes taken by Container Corp would fairly compensate the company for the rise in cost. The second we have is Motilal Oswal on Indraprastha Gas. Now, the brokerage has maintained its buy rating on the stock, but has hiked the target price to 381 from 371. Now, according to the brokerage, the volume traction for IGL remains strong, and there is further room to grow when it comes to the volumes for IGL. Now, IGL, which will be taking over the gas supply of Gurugram region by mid-2019, is expected to, now this region is expected to be the key growth contributor for the company going forward, according to the brokerage. Now, the management is expecting the total volumes from this region to rise from 0.4 mm SCMD to 0.81 mm SCMD in the next 3 years. That's what the management is expecting. Lastly, the key triggers for the stock going forward would be inclusion of gas under GST, effective implementation of ban on polluting industrial fuels, increasing penetration of CGD in new areas, and further restriction on diesel vehicle, according to the brokerage.
Interesting. Let's wait and watch what happens here as well. Amit, Nikki, thanks so much for putting that into perspective. NMDC, Gaurang, do you track this one and material impact because of these price changes?
So we do have a coverage, but it's on the reduced side, Neeraj. And, since a very long time, there has been some underperformance. Not really one of those stocks which actually comes across as an investment bet. So if you really want to stay with, metals related, our sense, Neeraj, is that direct exposure to ferrous, non-ferrous is the way to approach the counter. And over there, top two picks would be Tata Steel and Vedanta.
Okay. The last few days, as I'm looking at what's happened, some of the consumer durable names have done well. If you pull up the 7-day chart of Symphony, for example, you will see that the stock has gained quite significantly. I think from levels of sub 1,000, it's gained almost 15-16%. I would reckon some of the other cooler companies haven't done too badly either. Voltas, etc. Gaurang, what's happening here within this space? Some stray moves for a Symphony, or would you believe that there is merit in taking a constructive bet here after the kind of falls that we've seen across this space?
So I think this particular sector does merit a lot of attention and investment ideas with a long-term time horizon. And one of the triggers in form of public spending or, government either at state or center becoming a more, concerned of the state of affair of rural India, tier 2, tier 3 cities, semi-urban and rural India, comes in form of farm loan waiver in Chhattisgarh and Madhya Pradesh, and I think very soon you will have Rajasthan also following the suit. So when you have these kind of freebies being given out, it does put pressure on the state exchequer, but at the same time it does give a lot of discretionary spending power, if you will, to semi-urban and rural India. So we are positive on Symphony. If you're talking about white good appliances, consumer durable, then Symphony, Whirlpool, Voltas and Blue Star. These are the names that we cover, and my sense, Neeraj, is that these companies will see very good top line and bottom line growth over the next maybe about 8 to 10 quarters. So it does deserve a lot of merit.
Are you tracking Coal India? On 20th of December, they're looking to announce their interim dividend. They've not yet, given us the figure. But what happens in terms of, if their announcement does come about in terms of the cash from the books, as well as, how do shareholders read into this?
So, Devina, when you are a PSU, a government-owned company, this is one of the things that you have to do by default. That is pay good amount of dividend to the government. And if you happen to be the shareholder, by default, you also get that good dividend payout. So we remain positive not only from this dividend payout point of view, but more so the kind of volume output that has gone up over the last 2 or 3 quarters, and more importantly, the quality has improved because the government has introduced a lot of washeries as well, because that was the a negative point and a bone of contention, if you will, when it came to the quality of coal. And of course, as we all know, Coal India happens to be the largest natural resource company in the world with the kind of coal reserves that they have. Consumption, I don't think, is going to go down. Alternative fuels will take time. The theme will take time to play out. And as the Ministry of Coal said, that soon possibly India will be self-sufficient and you might have even exports coming through. And more importantly, e-auction has kind of brought in stability in terms of pricing and a little bit of discipline as well. 365, if I'm not mistaken, is the target with a 2.5-3 time horizon.
All right, that's Coal India out there. Anything else, Gaurang, that you are closely tracking right now, and probably entry points are around the corner?
So I believe that some of the mid-cap FMCG, we just discussed about consumer durable white good appliances. So FMCG mid-cap looks quite attractive. Yes, you did see 10% rally from 400 to 440 plus on Dabur, and then you saw the stock correct yesterday. But Dabur, Imami, Godrej, Agrovet, Marico, these are the names that we believe will do extremely well. And not to forget, you had a fabulous outperformance coming from HUL over the last year. Correct me if I'm wrong, it was at about 1,000 or 1,200. Stock rallied beyond 1,800. So my sense is now it is time for ITC to play the catch-up. So you will have ITC also in the limelight. And of course, we have some of the mid-cap private sector banks, names like, or new entrants, if you will, new kids on the block, like in form of RBL Bank and Bandhan Bank. That looks quite attractive with a longish time horizon, including Federal Bank as well.
Okay, let's get in our technical experts on board to try and figure out what to do in a scenario like this. We are likely to start off about 0.5% lower. Hadrien Mendonca, Senior Technical Analyst at IIFL, with us on the show, as is Amit Harchekar, Director at Index Genius Investment Advisors. Gentlemen, both of you, good morning. Thanks so much for joining in. Hadrien, how do you approach trade in light of the fact that the world markets look a bit shaky? We are likely to start off 0.5% lower as well, but by and large, we've been trending higher.
Yeah, hi, good morning, Neeraj. Yes, we have been, outperforming the global weakness. In fact, we are defying every weakness that is witnessed in the US as well as the Asian markets, on the overall basis. Now, if you see the Nifty more specifically, it is trying to make an attempt to enter into the rising channel, which the rally that we saw from the October lows to the December first week highs. So I think that the rising channel is going to play a very important role for the Nifty going forward, because that would actually give a clear direction that the Nifty is intending to move higher from here on. Keeping in mind, the Fed meet, the big event that is lined up 2 days down the line. I think that would play an important role. However, price is something that is showing intentions that it is wanting to go up. The only cause of concern here is that there are very few large caps that are participating heavily into the current up move that is visible right now. So HDFC Twins, Reliance, ICICI Bank, these are a few of the big names that are participating heavily. We would like to see a lot more participation from even the other important names and other important sectors as well. That would actually give us more conviction that prices are here to stay and move higher from here on. But however, going forward, for the Nifty, 11,100, 11,200 zone cannot be ruled out because of the rising channel entrance that Nifty is making an attempt to. Whereas as far as the Bank Nifty is concerned, 27,100 is that stiff resistance that Bank Nifty has to break if we are going to see further up move from here on.
Let's wait and watch if it breaks or no. I mean, Amit, I'm more interested in trying and figuring out if there is a possibility of a downside in an otherwise upward trending market because of what's happening globally. Assuming we do start off what the SGX Nifty is showing us, which is about 0.5% lower, would there be merit in taking a short trade, or maybe an options trade on the short side on either the Nifty or the Nifty Bank?
Not really, because if you see the price action in Nifty from mid of November, now it's very clear that the entire formation from 12th of November has taken a shape of a broadening ascending wedge pattern. Now this pattern has a very high failure rate in the initial down leg, and that is why ideally this pattern should have bottomed out at around 10,700. It managed to broke that, and we have seen a major rebound. Now historically this pattern is bullish, and if you see the amplitude of this pattern, it forms in the range of around 600 to 700 points. So if you apply or try to replicate the upper projection of this pattern, it will give you a target somewhere around 11,450. So, and if you try to split the market condition and try to find out who will lead the rally, we have on one side commodity index, which has given a very strong breakout. You have Nifty Liquid 100 index, even that is trading with a very strong breakout after yesterday's move. That is why we are seeing a broader participation, and despite global weakness, the markets are not falling, because the sector which were dragging markets lower, now they have started to move up. And we think now the market becomes a very good buy on declines, and since major long positions is built in the zone of 700 to 800, we think the market is set for moving higher in the coming days. No doubt there would be volatility, but this volatility you should be used to build your long positions from a positional perspective.
All right, we'll come to your stock ideas in just a few moments, gentlemen, but time to get on to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown out on a particular stock or a trend that he spotted. Yash, what's on your radar today?
Morning, Devina. So we are tracking IGL on the charts today, and it has given a positive call on the back of the trender indicator. Let's first try and understand what it is. The trender is basically a Bloomberg proprietary indicator, and it uses the average true range for calculation to generate a buy or a sell signal. How do you interpret it? You go long when the trender indicator changes its line from red to green, and that happens when the stock closes above the trender line, and you go short when the trender line turns from green to red. So in the case of IGL, as you could see, the stock saw a big up move of more than 3.5% yesterday, and with that it has managed to close above the trender line, which is of red color right now, which means that it would flip the color to green, indicating an up move from these current levels.
All right, and how well has this worked?
So on an average, 3 out of the last 5 times that the indicator has turned positive, it would have given you positive returns on an average of more than 9% over the next 10 trading sessions.
Okay, got that. Thanks a lot for that, Yash. Let's take some stock ideas then from our technical experts. Hadrien, why don't you start off?
Yeah, so both the ideas are on the long side. So first one is an MGL. We have seen a clear cup and handle pattern breakout on the daily charts, followed by surpassing of its 200 moving average on closing basis as well. In fact, it is second consecutive session it is managing to sustain. I think MGL, merits a good buy at these levels. We are expecting a short-term target of 925, keeping a stop loss at 883 on the downside. The second long position is in JSW Steel. Actually, JSW Steel is not a momentum call. In fact, it's a bargain buy. The stock has been in a correction mode for quite a long time now, and it is finding good support around its 100 weekly exponential moving average. Secondly, in the previous week, if you notice, it has also formed a doji pattern, indicating that there could be some kind of short-term bounce expected. So JSW Steel merits a buy at these levels. One can buy for a target of 307 in the short term, placing a stop loss at 296.5.
All right. What about you, Amit?
Yeah, I have 3 buy calls. First would be buying ONGC. Now the rationale for ONGC is very clear. We believe the Nifty Energy Index is poised for at least a rally of 11% in the coming days, and ONGC forms the second heavyweight stock from that index. So we are expecting the stock to move towards 160 based on a top-down approach, and the stop loss for your long trade would be at 142. Second pick would be buying Bajaj Finance. Now the Nifty Financial Index, again, where we see a rally of around 7 to 8% in the coming days despite global volatility. Again, Bajaj Finance becomes a very good heavyweight stock within that. Here the target would be around 2675, and we are expecting a solid support around 2400. So 2374 would be a stop loss on a closing basis. And last would be buying a Hindalco. The reason why here, as we have mentioned, that Nifty Commodity Index has given a breakout in yesterday's trade, and that is poised for a rally of around 12%. So here the stop loss would be at around 217, and we are expecting even Hindal will go to march towards 240.
Okay, I just want to view, Hadrien, from you on Jet Airways. Yesterday I saw a very interesting move between the cash market price and the futures market price of Jet Airways. So at a point you had the cash market trading lower by about 3.8%, while the futures of Jet Airways traded lower by almost 8%. So there was a big cash future arbitrage out there. I mean, this doesn't happen too often in terms of the kind of gap that we saw amongst cash and futures. But what happened out there, if you managed to, get a sense of it?
Yeah, so yes, definitely there is a big arbitrage that is available even right now. If you see the futures is closed around 232, whereas the cash is at around 249. I think it would be prudent to continue to remain short on Jet Airways. I think there is still more downside going forward because of the pattern breakdown that we have witnessed on the charts. So I think short holders, if there are any from yesterday's trade, should continue to hold on their short positions. On the downside, we could see the futures moving towards the 220, 215 levels as well on the Jet Airways.
Well, 233 and counting, 9% lower in trade. There was extreme short positions being built up on Jet Airways in Friday early morning session itself. I think we were speaking about it in the newsroom as well. At least I was on the WhatsApp groups and listening into that as well. And it's clearly played out on the futures side, 233 and counting. Let's see if there's a bit of a reversal in today's session. I don't know if the crude prices bring about or no, but bunch of stocks, bunch of news, including they accepting that there's a forensic audit on and they are complying with it. One of their key personnel not returning from the holiday. So all of that kind of weighing in on Jet Airways. The question mark only is, can it fall more or would it stabilize at the current levels? So Jet Airways becomes a very interesting stock to monitor. Gaurang, what do you do with the Jet Airways? Not an Indigo, not a SpiceJet, Jet Airways individually.
So I think indicators were clear that you need to bail out of the flight. The airline is going through turbulent time, and the man that they identified to get the airline out of the turbulent time has not come back, and possibly there are news as that I heard yesterday that he has already put in his papers. So there is a big question mark. Secondly, confirmation of forensic audit has also thrown in a lot of concern. And more importantly, I think time is running out for Mr. Goyal to act on what he thinks is appropriate, and if he has to sell the controlling stake to a new entity, then so be it. I mean, ego should be kept aside, and companies' paramount importance along with their employees and investors should be given far more importance rather than individual ego. So I hope that the wisdom prevails and appropriate decisions are taken. According to me, well, first of all, Neeraj, we don't cover the stock, so I won't comment on buy, sell and hold. But if you do want to look at aviation sector, then Interglobe Aviation is the only stock, according to us on the fundamental side, that deserves a lot of credit.
Okay, that is a preference towards Indigo versus Jet right now. NMDC, a stock which is in focus this morning as well. So again, pricing cuts that they have taken, second time in the month of December. The stock right now, obviously, and there are talks of how NMDC is likely, to go ahead and file a complaint with regards to the government and them wanting to share the revenues at the Dolamalai mine, and that could have a slight bit of a negative bearing on the stock price as well. But Gaurang, what would you do with an NMDC?
So like I said, it's highly avoidable because the underperformance has been there for quite some time. And, once again, you go and file complaint to the regulator authority, resolutions take time. And my sense is that these underperformance that we've seen on the counter are not going to go away anytime sooner. So instead of an NMDC, I think a direct investment from a long-term point of view in the metal, ferrous, non-ferrous will augur well. I did mention about Tata Steel and Mendonca. JSW Steel will be the third stock that should definitely be on the radar.
There are some banks, and just wanted a quick view here. Technicals, we discussed Kotak fundamentally, but Amit, 2 or 3 names which are popping up Kotak Bank, of course, which was amongst the top losers yesterday. But if you have a thought on Federal Bank and Canara Bank as well.
Well, Kotak Bank, we think the stock is a very strong support at around 1180, 1200. So that would be the area where one should again buy this stock from a positional perspective. The reason why we are expecting Bank Nifty to cross 28,500 and Kotak Bank again a heavyweight stock within comes under top 5. We are expecting that to outperform. Federal Bank, we think this rally could be entering into a resistance zone between 95 to 98. So that would be the area from where the stock would take a pause and back towards 91. So that would be the area where again you should re-enter at the lower levels. We think most within PSU banks, we should expect a major outperformance from current levels would be from SBI. We are expecting that to cross around 310 mark and could settle at around 325. For one reason, because SBI forms an heavyweight from that Nifty 100 liquid index, which has seen a breakout in yesterday's trade. For Canara Bank, the formation seems to be quite good. But if you see the structure from end of October, the upper resistance line falls in the zone of 278 to 280. So that should be the area where one should be booking your long positions even from a positional perspective.
All right, gentlemen, stay on with us. We've got 30 seconds left to go for market pre-open. We'll got the SGX trading under by about 0.5%. So the indicators are pointing towards a lower open this morning, taking off from the levels of about 10,900 where we traded at in yesterday's session. That's Asia for you, the rest of Asia. So it seems to have worsened for Hang Seng at least, which was down just 0.2%, but is now down almost 0.75%. Shanghai is trading under by 1% and Nikkei 225 down 1.23%. That's SGX once again for you, down 50 points, 10,864. Market pre-open then on your screen. So Nifty, the first move down in the red, about 0.33%. Sensex, divergent move, but those prices will settle in just a few moments. Want to quickly look at the movers in terms of specific stocks. Wipro is a stock which has moved lower in trade this morning. Initial ticks suggesting a 3.5-4% cut on the stock. Z is down 1.7%. Hindalco 2 is down at 222. You've got Grasim, Kotak Mahindra Bank at 12.10, following through yesterday's pain, 3.8% lower yesterday, today down 1% in pre-open. Axis Bank down 1%, NTPC down 1%, 0.5% plus. Bajaj Finance, Axis Bank, Dr. Reddy's Lab, RIL 0.5% given up. Bharti Airtel, Bharti Infratel both looking weak this morning. Amongst the gainers, Tata Motors continues to gain. Yesterday, the stock was one of the best performers on the index. It was up almost 4.5-5%. Talking about some job cuts coming in there, feeding into cost improvements. So that stock doing well today as well, 0.5% higher. HDFC Bank. Then you got Cipla, you got Sun Pharma, Gale doing well, about 0.25% apiece. For the currency, it's slightly better off. Some strength coming in, 71.35 on the rupee versus the dollar.
Okay. The bond yields should come up, but this is 2 days of strengthening now, and the bond yields at 7.46, steady as she goes as well. The broader end of the spectrum, want to see whether Graphite India and NMDC have some reactions to them or no. Should pull up both those stocks. A very minuscule impact for Graphite India, to be honest, fundamentally, but 3% higher. NMDC, well, down about 1% now, no major reaction. Speaking of Graphite India, HEG should also come up on your screen. Typically, they tend to move in tandem. Let's see if HEG has some moves. No, not right now. Just lying quiet in trade. Quality continues to grind lower. So that's down about 4.5% in trade as well. So yet another day of a downtick for quality. What's moving up? Okay, let's hold on to our horses. Manpasand has an uptick, but these things might change. The top 4-5 names don't quite inspire too much of confidence. We have Unichem Labs, which is up marginally about a couple of percentage points, but that's about it. And lastly, since I'm not seeing too many movers, just want to know what some of the PSU names are doing, because they were very active in trade yesterday. So the likes of Bama Lorry, BEML, Dredging Corporation, Coal India, all of which were up anywhere between 7 to 12% yesterday. Maybe, just maybe, taking a bit of a breather, each of these names. Let's wait and watch what happens here, and then maybe take stock of the situation after about 9:08. But not too many reactions at the broader end of the spectrum, at least. The large caps too lying a bit muted right now. Not too many stocks which are moving around as well. Hadrien, the PSU lot and the kind of moves that we've seen yesterday, would you trade any of them? Strictly a trading position, maybe intraday, maybe a couple of days, but the Barmer lorries, BEMLs of the world?
Yes, definitely. BML looks pretty interesting. In fact, the move that we saw in the past 2 days has been, very convincing. Now, the only issue here right now is that it is approaching its long-term 200-day moving average. So, any long positions, can actually take some money off the table around the 885 levels. That is the long-term 200-day moving average resistance zone. However, if you see the overall structure, it is actually, emerging out of an inverse head and shoulder pattern. Which is definitely a very, very positive development after the kind of fall that BML has gone through in the past 7 to 8 months. I think, apart from the short-term trading strategy that we are looking at for a target of 885, I think BML turns out to be a very good delivery-based buying if someone has a 7 to 8 months, horizon. BML could turn out to be one of the good stocks that could deliver good returns, going forward. So in the short term, 885 should be your target.
Okay. Watch out for these stocks. 885 could be your target. Speaking of Jet, if you can pull up what the price is doing right now. Remember, the futures price is the one that we should track more, but another 2.5% cut for Jet Airways on the cash market. We'll get to the futures post-market open as well, but do watch out for this one. Interesting as to what's happening here. We've already spoken about it, so won't dwell too much on Jet Airways, but do watch out for what's happening on that stock in the session today as well. Tata Com looking like starting off lower. No, actually all over the place. Let's give these rates a chance to stabilize a bit. Gaurang, two large auto ancillary names, actually three names. And if you track any of these three, Motherson Sumi, Bharat Forge, or a Jamna Auto, which was a CV favorite until recently, but has cracked quite significantly from those highs of 100.
So we track two of these names, Bharat Forge and Motherson Sumi. And, Neeraj, at 140, 150, I think most of the people had written off Motherson Sumi. There were issues, let's face it, but I don't think it was totally the responsibility or the bad governance on part of Motherson Sumi that things went wrong. I'm talking about big niche and marquee names in the overseas international, car manufacturing and company names. On the domestic front also, I think the acquisition of one of the companies about 3-6 months back created a little bit of concern because the valuation that they paid according to the market players, that was on the higher side. We remain positive despite all these things. And the most important thing, Neeraj, is that the business strategy that the management has laid out of Motherson Sumi Vision 2020-2022 all was extremely well with our kind of conviction that we've had. So my sense is that 235, 240 should be the target on Motherson Sumi over a longer period of time. Bharat Forge, again over here, because of Class 8 truck issues about a year and a half, two back, everybody wrote off the stock. Stock did bottom out. Then we saw 38% uptick in the Class 8 truck orders from the US and, of course, rest of the world. So our belief is that possibly 825 or maybe a little bit higher could be the levels on Bharat Forge over a longer period of time.
Okay. Got 8 minutes left to go. Just want a sense on Tata Motors. Yesterday's session saw the stock being one of the top gainers on the index. Both Tata Motors and Tata Motors DBR did well in the session. Today is slightly more flat in the session. But Gaurang, what's happening here? And then I'll come for a chart check also on Tata Motors.
So Davina, I think I'm the only person on the street who's positive on Tata Motors on the fundamental side. Both Tata Motors shares as well as DVR. And, these entire restructuring or hiring up a consultant to draw down a business strategy to make things turn around. I think this speaks for the kind of commitment that the management has towards reviving the company. Now, the only drawback, according to me, is JLR. And it is because of this JLR, when Tata Motors took over JLR, that people on street were advising you to buy it. And now it is because of this JLR, which is going through troubled times, difficult times, that people are saying stay away. But it is not so. I think over the next 6 months to 1 year, there is going to be great strategies that are going to be put in place. Whatever excess is there will definitely be cut off. And I think the balance sheet will turn out to be very slim and trim. Domestic business in passenger vehicle and commercial vehicle is doing extremely well. And in fact, they have regained the market share in commercial vehicle by capturing 3 to 4% market share of Ashok Leyland. I stand to be corrected over there. This was the situation, I think, about a quarter back. And for JLR, I think, yes, China is a little bit of problem. Brexit is an overhang. But I think all that is there in the price. So I would not be surprised to see Tata Motors back at the lost glory that it has had in the recent time of somewhere around 325 to 360. But this I'm talking about 2.5 year plus kind of a time horizon.
All right, it's a fairly long-term horizon there on Tata Motors stock in the last 12 months. Has shaved off almost 60%. A quick chart check, Hadrien, Tata Motors.
Yeah, absolutely. Past 4 days we have seen very strong move, and that move has come because of the positive divergence that we saw on the RSI and the price front. I think that is playing out pretty well on the upside. Short-term traders could continue to hold long positions for a target of close to 186. That is a 50-day moving average that Tata Motors is approaching. So I think long positions should definitely be held on to.
Okay, hold on to long positions in Tata Motors. Anything within the auto ancillary pack, Amit, that looks like a good play right now and a trading bet for maybe, say, a week, 10 days?
Well, my sense is we are quite negative on auto ancillary for one reason. If you see the entire Nifty auto index, it has started moving into a long-term bear market. And you will see a pullback of 3 to 4% in that index overall. And that's why we believe the upside would be quite capped. So from a very trading perspective, we think Bharat Forge is a one stock which has again seen a major breakdown in past few weeks. Now major hurdle or selling pressure comes in the range of around 530 to 535. So that should be the area where again we would suggest initiating fresh short positions. Stop loss would be at around 560 on a positional basis. We think post that Bharat Forge could be again forming a new low towards 485 to 480. So we have a very negative view both on Motherson Sumi and even on Bharat Forge. We don't think that sector 2 is likely to outperform in the coming weeks despite market rallying higher.
Okay, minutes away from market open. Stay on, gentlemen. Let's tell our viewers all that they need to know to stay ahead in trade today. First up, NMDC has filed a case against the Karnataka government. NMDC says the state government is taking a larger share of revenue from the sale of iron ore extracted from the Donimalai mines. The stock starting off 1.5% lower.
JLR has hired Boston Consulting Group to spearhead its $3.2 billion turnaround plan. Reports also suggest that JLR may cut nearly 5,000 jobs.
Ashoka Buildcon City Gas Distribution arm has raised 150 crores from Morgan Stanley India Infrastructure. The stock likely to start off 5% higher.
Indian Railways has cut carrying charge for empty containers and wagons by 25%. This means lower cost for its undertaking, Container Corp.
LNFS Transportation Networks looks to sell 22 assets and businesses in its domestic roads vertical. Upwood Capital and JM Financial have been hired as advisors.
Paint, tire, aviation and oil marketing companies will be in focus today. Crude falls for the third straight day. Brent crude slips below $60 per barrel.
Well, it's not having too much of an impact on the companies as of now, but let's wait and watch if during the course of the day there are some movements that we see in these names. As we look at the pre-open rates, HPPP RC certainly look like starting off higher. IT is looking like it's going to be a bit muted. And at the broader end of the spectrum, as we said, not too many reactions. Gaurang, before we thank you, one final word. Do you track any of the construction names? Ashoka Buildcon, they've managed to raise about 150 crores in the city gas distribution arm as well. Stock is likely to start off 5% higher. Any thoughts here?
So Ashoka Buildcon, amongst the road, highways, etc., we like PNC Infra, KNR Constructions, and of course, an 80-year-old company which is in India for a very long time, L&T, does also have this presence over here. So we are positive on all this name. But the only problem is, Neeraj, that at least for the next 6 months or so, approvals may not come through so easily because of the general election. So if you're looking at maybe, post June, July 2019 and a time horizon from there onwards of another year and a half, 2 plus, then I think these names with the kind of order book they have and lower debt on the balance sheet should stand out in the sector.
Okay, Gaurang, we'll leave it at that. Thanks so much for taking the time out and joining us this morning. Appreciate your time as always. That's a view from Gaurang Shah of Geojit. BF Utilities about 1.5% higher. Interglobe Aviation about 1% higher. Sterlite Tech has gotten beaten down quite a bit, looking like starting off marginally higher in trade, but no big reactions otherwise. Jet Airways 242, down about 3% as well. Tata Elxsi looks like starting off slightly weak too. Actually, anything on IT as a trader, Hadrien? Either large cap IT or active stocks like Tata Elxsi or Mindtree?
Yeah, I think in yesterday's trade, what we saw is a little bit of profit booking. Even Infosys, the heavyweight, was under pressure. So I think one should avoid going buy if you are a short-term trader currently, because it is losing the momentum that it showed in the previous week. I think so. So IT should be something that you should avoid at this moment if you are a momentum trader.
Okay. That is a quick take on IT that's coming up. Anything in the oil and gas pack, but I think before that, let's get in a sense of what the top calls are this morning, because we're very close to opening. So I'll start off with you, Hadrien.
Yeah, so one can consider buying Cummins India. We are seeing a flag pattern breakout on the daily charts. I think we are expecting a short-term target of 855, keeping a stop loss at 819 on the downside.
Okay, and Amit?
I would suggest buying Reliance Industries on expectation of inverted head and shoulder. Here we are expecting target of 1250 from a positional perspective. For short-term, the stop loss would be at around 1175.
Just 30 seconds left. Hadrien, maybe just sneak in a quick index call yet again. We took it at 8:45. A lot of people tuning in right now. 10-second call. Would you look at going long on the Nifty 0.5% lower?
Yeah, absolutely. Any kind of decline that we may see should be a good opportunity to once again enter in the Nifty. Absolute buy.
Absolute buy. Okay. Both our guests, I must tell you, are bullish on the markets as of now. All calls that have come out thus far on the stock specific side too have been buy calls. Stay on, gentlemen. We'll just take in opening thoughts from you post market open. But this is how we're starting off. About 1/3% lower for the two benchmark indices. The Nifty Bank to about 100 points lower. So in line with what the benchmark or the pre-open rates were suggesting, or what the SGX Nifty was suggesting as well, less than 0.5% for each of these indices. Now weakening a bit further for the Nifty. Nifty about 56 points now. So you're starting off weak for sure. The mid caps and the small cap should come up on your screen as well, and let's see what's moving. 1/3% for the mid cap index, small cap index lying flattish in trade, but weakness by and large seems to be the order of the morning. The heat map, well, a lot of red on the screen, very little green. Let me start off with the green then. Tata Motors about 1% higher. HP, BP and IOC, because of the crude price fall, I reckon a small trading green, but don't know how long it'll last. But for now, these are the three stocks that look like starting off marginally in the green. Aside of that, on the weaker hands, Infosys starts about 1.5% lower. Z Entertainment, Tech Mahindra. So IT is not having the best of days today. HDFC Bank, I saw somewhere in the top 20 losers too. So that one is looking slightly wobbly. HDFC is down about 1% as well. Grasim down about 1% as well. So 2 or 3 names from the financial side are not looking all that healthy. But essentially, a lot more red, very little green. Not that it was unexpected. No major casualties is the key thing that I'm seeing today. Infosys is the top loser, down about 2%. Couple of pockets that I want to highlight before I hand it over to Devina for what's happening across the broader end of the spectrum. Firstly, stocks which were very active in trade yesterday. Bama Lorry, BEML, Dredging Corporation, sadly not quite moving up in the session today. What about the crude price fall beneficiaries? Do we see an impact thereof? I've already spoken about HPCL, that is in the green. Berger hardly saw, Interglobe Aviation hardly saw. So no, not too much of a movement in these counters either. Maybe some stocks in news or pockets of focus in the session today, and the prices have been revised downwards. NMDC, and while it looked like it's starting off marginally higher, it now in the red, about 1% lower in trade. Devina, what are you spotting?
Started off with an Ashoka Bilcom that trades higher by about 6.5%. The indices themselves are trading under, and the advanced decline ratio tilted in favor of the bears. But specific stocks that are holding in the green include the likes of INFS Transport, which is up about 4%. You've got a Bombay Dyeing, which trades higher by about 3%. Then a BF Utilities at 214, that's up about 2.5%. The likes of for Tata Motors DVR, following suit with what Tata Motors is doing, is up 1.3%. Then Jindal SAW is up 1.3%. From the tyre space, the SIAT is up 1% as well. Amongst the losers, Quality lower circuit again on the counter. 8K miles, 3.5% lower. Jet Airways down about 3% so continues to bleed a bit. Unitech, a small penny stock now, so that's down about 2%. The likes of an L&T Info down 2%. Then you've got a DB Corp down 2%. Godrej Consumer is down 1.2%. Bamalore, you already highlighted. MTNL is also another stock that's looking weak, 1.2% lower, 1.5% lower on an MTNL. So all in all, still a weaker start this morning.
Well, certainly weak and 0.5% lower. But I think both our experts already mentioned that they would look to go long on any weakness. I asked Hadrien about IT. As I look at the start today, seems to be the case that Nifty IT is arguably the weakest hand at play. Infosys, Wipro and Tech Mahindra are amongst the top 7 losers. HCL Tech finds its way into the top 10 losers. Nifty IT not looking quite that healthy. Amit, Harchekar, I would come to you. Infosys and maybe even a Wipro, both of them amongst the top 3 losers. Is there a trade here?
Well, my sense is they would turn market neutral. For Infosys, good support is seen at around 655, 660. So that is the area from where it should bottom out. For Wipro, we think 320 remains a very strong support. Now, what we are expecting is, though we have a very negative view on IT index, but if you see the Nifty service sector index, where again we have a Nifty IT contributes there, we are expecting that index to move up. So we are not expecting the fall to happen in IT straight away. There could be a decline of 3 to 4%, but thereafter the stock are likely to move sideways.
Okay. Hadrien, a quick opening comment from you.
Yeah, so as we earlier discussed, any kind of decline. So for the Nifty, anywhere close to the range of 10,780, 10,800 should be a good opportunity where one can reconsider entering long. As far as the current weakness that we are seeing, if someone wants to play a short position, then Tata Global would be a good opportunity for short selling December futures. I think the stock is all set to gradually move lower towards the 200, 202 mark in the near term.
Okay. We leave it at that. Gentlemen, thanks very much for joining in. Amit as well as Hadrien, appreciate it. Moving on then, and bringing in Andrew Holland, CEO at Avendus Capital Alternate Strategies. He's joining us on the show right now. Andrew, good morning to you. While we have been making our approach back towards those levels of 10,900, 11,000, it's the global markets and the sentiment around thereof that is something that we need to really be careful of. And that could be a major risk to this uptrend that we've been seeing in the last few weeks. What's the sense as to how much in terms of a trigger could the global market sell-off mean for us?
Yeah, obviously it's going to have a a negative sentiment impact, but I think thinking about 2019, I think you're going to have bouts of weakness in developed markets, which is going to be a great opportunity, to pick up stocks in India, because the way I'm thinking about it is that when we hit highs in August of this year, the oil price was at 80. And we had a more hawkish RBI governor, and both of those reversed significantly in the past 1 month. So, with a lower oil price, obviously that's great for the deficit and for inflation. And given that, then obviously the new RBI governor, I think, who will probably be more business friendly, has the scope to reduce interest rates. So I think the liquidity, problem that we were facing maybe September, October anyway was going away. And this will be helped by further kind of liquidity and monetary policy by the RBI, which I think will be more accommodative. So, all of that lends itself to the markets going higher. But you're right to say, global sentiments will be there. But I think that's the opportunity in 2000, well, now and 2019 will be these opportunities that will be given by developed markets, where I think the problems are real. Compared to India, where we're still growing at 7.5% GDP growth.
Andrew, I'm keeping it global, for the moment, because that's one of the for our domestic factors. Most of the overhang is out. We had the state elections out of the way, the appointment of the new RBI governor. But for the US markets, there were 3 probable triggers that could have reversed the downtrend that was being seen in the US equity markets. 1, valuations being cheap, that didn't encourage bulls to come back into the market. 2, the previously dovish commentary from the Fed chairman, that didn't manage to excite the markets. And 3, even a moratorium on the trade war has not managed to do anything for the equity markets. So is this risk more real and a further downside even after the kind of sell-off that we've seen on the US equity markets? And could that mean a bigger blow for us?
No, see, let's put this into context. First of all, despite the falls in the US market, for the year it's probably flat to very small negative. So it's not as though it's been a disastrous year for the US market. It's just off from its highs of the year, like most markets in the world. So I think we're playing too much on that. I expect the Fed chairman in his statement on Wednesday to be a lot more dovish, because I think whilst he might still raise interest rates, I think some of the indicators coming out of Europe and the US is of a slowdown. So I think he'll be more accommodative in what he says about the interest rates moving forward, and I think he'll move away maybe from inflation targeting to how the US economy is actually faring. One of the mistakes that the Fed Reserves make over many years is raising rates when it shouldn't, at probably the wrong time. It's probably the wrong time now because the US is slowing. The trade war, if it continues, would probably mean that more and more people will talk about a recession in the US economy. And this is why I'm saying it's a developed market problem. This year, if you look at emerging markets, they're anywhere, depending on currency, anywhere down between 5 to 30%. So I think a lot of the pain has already been taken there. So I think it's the developed markets I see in 2019, which will drag emerging markets down, but relatively I think we'll be better off. And I think once dust settles on some of this, then it'll be fine. So I think I'm not trying to put too much emphasis on developed markets, because they will have a sentiment impact, but that doesn't take away the fundamentals of what we have in India. And the fundamentals in the very short term are very positive, for the markets. So if you get a dovish Fed on Wednesday, then markets might take a sigh a bit of a relief in terms of that interest rates aren't moving as quickly in 2019. But on corporate earnings, I would say that for the US companies, I think there will be some downgrades coming. So therefore, valuations which you mentioned are cheap, probably not as cheap as people are thinking.
Andrew, okay, and that's a fair point too. I mean, 2019 was a year of some extremely strong earnings growth for the US companies. Maybe it fizzles away a bit in 2019 rather. 2018 was a strong year. But Andrew, just wondering, I remember a conversation about, 2 or 3 months ago, where you were sitting on a fair bit of cash. You sounding a lot more sanguine about India's prospects. Have you deployed some of that cash already, and would you look to increasingly be fully deployed at some point of time within the next couple of months?
See, what I've consistently said, I think, 2-3 months ago when the markets were falling, I said, you're getting good opportunities in certain stocks, and therefore we would look to deploy some of that towards that. And that, that's what we've done. It's not as though we're kind of rushing to the markets. There's a lot of moving parts, and up until last week, you had quite a number of kind of different events which could affect markets, ranging from our own state elections, but then you had OPEC, you had quite a number of events, and we still have them. We've still got the Fed. We've got Brexit, where there's now no confidence vote by Labour for the Conservative Party. So there's many moving parts at the moment. So I think you've got to tread carefully. It's going to still be a volatile 6 months. I'm not taking that away. So we'll continue to tread carefully. But if opportunities present themselves in certain stocks or sectors which we feel are more compelling because of global markets or local factors, then that's when we'll step in. But don't need to be aggressive in these kind of more volatile markets.
Which are the safer haven pockets right now within the Indian equity market, Andrew, that you're spotting as an investment opportunity from a 3 to 5 year horizon?
Well, 3 to 5 years is probably the whole market, but I would say that in the very short term, the places to hide remain kind of FMCG, where you have very strong growth, and obviously the safety in terms of defensive sector. IT still looks okay, going forward, and we've seen some of the more beaten down stocks, whether it's in the banking sector or the auto sector, start to recover quite strongly as sense prevails, and not everyone is tarred with the same brush. So I think that will be the continuing theme for the next few months. It's going to be more liquidity driven and momentum, and that's really where you're going to make the money in the very short term. So I think the next 1 to 2 months is a better environment for India, particularly given I think the RBI does have had scope last time actually to reduce interest rates. But then, as we get towards the elections, it's going to be a little bit more volatile, and of course in 90 days we'll know whether China and the US have moved to any kind of resolution. I suspect that both will want to do that very quickly, because both the economies are slowing very quickly.
Specific, a pocket that I would like to talk about is the auto space, and this particular period has not been all that good. So be it your, except for your truck makers and your tractor makers, you've got some pain points in your passenger vehicles, your two-wheelers. So it's not been all that good even in terms of your monthly volume numbers. Do you see that turning around anytime soon?
I think it will kind of remain stable now. You're coming off very high growth rates, so there's got to be at some point where you settle down. I think it was. I think it got impacted in October, November, with the kind of the mess that we're seeing in the NBFC sector, and I think people sat on the hands of it with higher interest rates than they normally would. But again, I think now you just look at where bond yields are, and I think things are getting back to normal. Therefore, the whole NBFC sector will start to improve. But again, I'm not saying that across all companies in there, because there's quite a number of companies who shouldn't be doing, that kind of NBFC business. So I think that the bigger will get bigger in this space. It's a bit like what happened with the private banks and PSU banks. The bigger will just get bigger and take more market share, and that's really where you need to focus.
Okay. Andrew, it's an interesting analogy. What do you do? I mean, if you mentioned that autos are a bit like private banks, so the larger become the largest, would it be across spheres in the auto space, or would you pick and choose four-wheelers, two-wheelers, tractors within this bucket as well, even if you want to bet on the larger names?
Yeah, we're probably looking more at the four-wheelers and the two-wheelers at the moment. Obviously, if there's an improvement, then the auto part makers obviously become into play as well. They were beaten down quite a lot. So, I think you've got to be very selective. I'm kind of low to kind of mention names, but in terms of stocks. But, I think we all know the kind of companies that got beaten down in October, November, or sorry, October in particular. And those are the ones which have rallied, more significantly. So the quality will always stand out, and I think that's really what we look to do, and which is why I said at the very beginning, if global markets are has a risk-off trade and it provides opportunities here, that's great news, because they are going to be good opportunities to buy.
Andrew, now that the liquidity situation has become a bit more better, since the IL&FS crisis, even for some of the NBFCs, they are getting those bank lines going for them. You are seeing rollovers, almost 70-75% of CPs getting rolled over. So with things improving, are NBFCs a pocket that you would be interested in? And if you have to bifurcate within NBFCs as well, what would the sub-pocket be?
I think just, again, go to the quality NBFCs. I think that's where you need to be positioned. again, without trying to go into any particular name. I think what happened was that every stock got tarred with the same brush. And really what was needed was at that time just the RBI to step up and say, we're going to make sure everything's okay. It didn't. It did it quietly, and liquidity was provided. So there was actually no real problem, in the sector. It's just a matter of confidence. And confidence is key, right? That confidence is now back, and if the RBI governor, the new RBI governor, helps that along, then you will see the re-rating or the stocks kind of which have been beaten down start to recover a lot more. The other thing I would say is that obviously we expect the government to do some form of measures towards the elections. If it does this, I'll be even more excited. Is that with the government's obviously now has been spending a lot of money on infrastructure. If it can just help kickstart the kind of consumption a little bit more, then GDP growth and could accelerate, and I think that would be great news for the economy as well. So it's just a matter of tweaking here and there. I'm not saying go with populist measures, but if you can just tweak it to get the consumption moving again, particularly in the rural areas, then I think you've got a very strong economy, and that will stand out globally.
Leave it at that, Andrew. Thank you so much for taking the time out and being with us, and well, have a great 2019.
Thank you.
That's Andrew Holland with his thoughts on the markets and specific pockets. Largely bullish, I would say, on India in 2019. Let's take a break and try and figure out if corporate India lives up to that bullish commentary. Two very important conversations. Firstly, talk to Escorts. How is demand shaping up for the construction equipment business? We asked the CEO Ajay Mandar about the same, and then discuss the key growth drivers for Titan with CFO Mr. S. Subramaniam.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Right, back with Indian Open right here on Bloomberg Quint. Agriculture and construction equipment maker Escorts aims to achieve 1,100 crore revenues in FY19 on the back of increased momentum in infrastructure sector. The company is also focusing on increasing its portfolio in excavators where it has almost negligible presence. Call it diversity. To give us some more details on the new launches and the growth outlook, we're joined by Ajay Mandar. He's the CEO of the construction equipment division of Escorts. We also have Yatin Mota from our research team who are joining us to take the conversation forward. Yatin, over to you.
Thanks for that, Neeraj, and thank you, Mr. Mandar, for joining and speaking to Bloomberg Quint. Let's talk about the demand drivers for the construction equipment segment. We have seen some slowdown in growth rates recently, but do you think the long-term picture or at least the medium-term picture looks strong for the commercial vehicle business and the construction equipment business?
Demand is robust as of now. In fact, 1 or 2 months down, I don't consider it to be down. But the demand is basically coming from the infrastructure side. The roads and other infrastructure projects that are going on, and the kind of money that the government is spending. The central government. I think that is propelling the major demand for the equipments.
And Ajay, you have launched a couple of new products in the marketplace. If you could just appraise as to what are the segments that you are targeting with the new launches that you have done.
Right. As you know, our strategy is basically getting into technology for the existing products and for and extending the portfolio. The bigger participation in construction equipment space. So we had the JV machine, the CTI 500 EX. It's a 50 tonner at 3 meter machine coming out of Tata Escorts joint venture. And then we had a tie-up, distribution tie-up, which we announced earlier with Kisan for excavator. That also is panning out well because the excavator going forward are growing at much faster pace as compared to any other equipment. Then we had the launches in our existing range where we talked about technology upgrade of Hydras. We launched Hydra next generation, Hydra next 13 ton, which is about more safety on the equipment, where the cabin is in the front and the pivot point is in the front. From the cabin, the operator can see the load movements and can perform a safer function. Plus, we have moved in from Hydra design to modular platforms for the next generation of Hydra. So safety is of paramount importance to the people around at the site. So that is what we had considered while designing this product. Then we launched the compactor. Compactor is an 11-ton range. This again is the best, the compaction force in the class that it has been launched in, 11-ton class. And then, the speed has been increased for this compactor. So you can do much more productive job at much faster pace. Because the government is talking about doing 30 kilometers per day kind of construction, and these kind of machines are going to come handy while doing these projects.
And Mr. Mandar, last time when we were speaking to Bharat Madan, he said that post the festive season, they will be looking at price hikes, given the fact that the commodity, costs have firmed up for the agri-equipment segment. Does the same apply to the, construction equipment segment that you handle? And how really, are you looking to take hikes moving ahead in terms of the product pricing?
So generally, the quarter 4 is very strong for us. And what we are trying to do is, effective 1st January, there would be inflation price passed on to the customer. We are not passing on 100%. Some of is getting absorbed because of the value engineering projects that we have done on the products. And by the way, we are still looking at 2 to 3% increase on the base price of the product from 1st January. So, with that, I think the inflation up to this date would be covered 100%.
And also, this was about the domestic market. Let's talk about the export market. How are things shaping up for the construction equipment segment, and how really are you ramping up your presence there?
Yes. If you look at our Vision 2022, we are looking at going from 10% to 30% of revenue coming from export. So, having said that, what we have done is we are expanding into South American markets. Africa has become major for us in the sense that we are exporting all the portfolio, full portfolio, that is the crane, backhoes and compactor to Africa. Middle East also we are looking at redefining because Middle East needs a better kind of cabin and new design, so that design is getting developed. In the meanwhile, we have done the sampling of our products with the distributor channel that we have put up there. And the second strategy or second lever is contract manufacturing for the export marketing.
Okay.
So we are getting into contract manufacturing with a couple of guys. The samples have already gone to them or in the process of going, and we expect that the real taste of it would probably come next year.
For the tractor business, Escorts has been looking at a couple of joint ventures, a few, partnerships have been announced on that business side. But talking about, the technology and the new JVs for the, commercial vehicle segment or the construction equipment segment, how is Escorts really looking at, it moving ahead?
Yes, as I said in the start, there are two strategies that we generally follow. One is technology in the existing products. What we've done is last year we did a joint venture designing partnership. It's basically a design partnership with Indian aggregates with European company. That product that is going to come out, we will be in pick and carry portfolio, and that portfolio will further expand. And with that product, that product being a CE certified product, we should be able to open up the entire world for that crane. And on the expansion side, we are looking at some more products. Probably first quarter of next fiscal year. We are planning to introduce one mass marketed product in material handling segment.
Okay.
I cannot give you any further details, but some discussions are going on, and probably you will find from us again a participation into a segment which is both volume and at the same time value.
Thank you, Mr. Mandar, for giving us that perspective on the construction equipment segment. So that was the management of Escorts, fairly confident that the infrastructure segment in India will probably drive the demand moving ahead in the coming months. Devina?
All right, Yatin, thanks very much for that. The markets for themselves right now still in the red, 0.5% lower on the Nifty, as well as the Sensex banks looking weak, 26,900 on the bank Nifty. We're going to take a very short break here. We'll come back with lots more.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate, and genuine help for shoppers looking for the best new things on the shelf.